The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 2nd, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order, well, usually I say in order to empower human potential. Because living up to our potential, folks, that is what we must master each and every day. So let's begin our day with some empowering beliefs. First, hope everybody out there had an incredible Thanksgiving and holiday. All of us, at least all of us here at TFNN, we so gladly were taking of the time off. Always good to get away, but even better to be back with you. So let's go take a look at our empowering belief system out here. You know what it is. It's called Become Your Own Electrician, the electrician of your beliefs. You know, you put today's opening with at 9 o'clock with this for your kids out here. This is all that they actually ever need to know. If they can grasp these two concepts out here, your life will be a whole lot better, as will theirs. Now, beliefs, they've got the power to create, but they also have the power to destroy. You and I, we have that awesome ability to allow ourselves to take any experience of our lives and create a meaning that either disempowers us or one that can literally save our lives, one that can take us to places never even dreamed of. Those are the empowering beliefs. Those are the beliefs that we want to become electricians of, folks. Think about it like this. There's only one thing that you and I can control. Only one thing. That's the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity. One, a buying opportunity. Your beliefs, our beliefs, the meaning that we give to events, to statements, to criticisms, you name it. Folks, we are the ones that are in control of that meaning. Now, really cool when you think about it, isn't it? Because what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters why? Because all personal breakthroughs, I mean all of them, they begin with a change in beliefs. So how is it that we change? Excellent question, I say. I've found the most effective way to change is to get our brain to associate massive pain to that old disempowering belief. We must believe at the deepest level that our disempowering belief has cost us in the past, it will continue to cost us in the present, and ultimately will only bring us pain in the future. 'Tis the season, folks. This is called the Charles Dickens process out there. That's all that it is. And it works, folks. It works so well. Sometimes knowing what we don't want, hey, it's just as important as knowing what we do want. I think knowing both, though, that is key, because once we rid ourselves of disempowering beliefs, we must associate tremendous pleasure to the idea of adopting a new empowering belief. And lastly, we must know that in any moment, a decision that we make can and will change the course of our life forever. Just go ask those folks at Alabama and Auburn out there. It could be the very next person we stand behind, maybe the next 1 second tick that's on a clock. Maybe it's the next person you sit next to, the next phone call you make or receive, the next movie you see. Maybe it's the book you read. Maybe it's just simply the page you turn, the paragraph that you read. Any of these, folks, they could be the single thing that causes all those floodgates to open. And then all of the things that you've been waiting for will fall into place. Let's go see what's falling into place in these markets out here. We've been bouncing around a bit right now. We're flat inside the S&P 500. Dow is off 23 points. It's trading out at 16,063. Composite is flat as well. It's trading at 40.58. Russell 2000, that's off about 4 points. It's trading at 11.39 out here. Apple's up $1 and change. Microsoft up 27 ticks. Leaders to the upside here, you got Chart Industries. Haven't seen them. We know that is nothing more than a, well, at this stage, it's a dead cat bounce, maybe a bit higher. May want to go ahead and bounce into the area where it broke down from. So Fun Holdings, SFUN, that's up $4. That's up 6.5%. Axial Corp, AXLL, that's up 9% here this morning. Let me see if they're out. Here's some names I'm not even that familiar with. You've got maybe yourself. Now, here's a name we are familiar with, Biogen, BIIB. That's up 355 here this morning. Westlake Chemicals, WLK, that's up 3%, up 350. Cimarex Energy, XEC, that's up 3.5%, up $3 and change. To the downside price line, off $7. It's trading out at $11.85.23. Netflix off $4.50. That's down, trading out at $3.61. Open Table, that's off $3.5. It's trading at $80 even, Steven. Rocket Fuel Inc. FUEL is a ticker symbol. They're off 7% this morning. They're down $3 and change. Cobalt International Energy off $3. 3M and Company off $3. Zillow down $3. LinkedIn off $2.75. New Skin Enterprises off $2.48. Our call number 877-927-6648. Give us a call, folks. Would love to hear from you. Let's start off by we've got the Euro Japanese yen. If you didn't follow us on the first hour here, we'll quickly take a look at this. You got the Euro Japanese yen making its way to the 1 to 1.272. A to B equals C to up. That's the 140.02 level. Also making that full measured move of the breakout of the consolidation pattern. It did that on Friday. Formed a little doji candle. Says today's candle is important. Now, what's really important is it's going to be a lower close. Lower close would be bearish. Or is it going to go ahead and take out the high of Friday? That's the key. If it takes out the high of Friday, we will see higher prices in the market. The high of Friday, by the way, is 139.69. You're trading 139.29 right now as we speak. Nothing here looks bearish. It is in a, let me put a different overbought, oversold calculator up here on the screen. Give me a moment here to do that. Let's go run into the study. Let's do this here. Yeah, it is also in the overbought range, so a move sideways would be bullish out here. We'll see what kind of strength is still inside the Euro-Japanese yen currency pair. Let's go take a look here at the indexes. Let's start off by taking a look at our favorite index. That's the New York Stock Exchange. Right now, as we speak, you've got net declining issues of about 745, I believe. That would be needed in order for this tug-of-war to continue without any real conviction behind the move to the bullish side or the bearish side is 500 and we'll call it 550. It's somewhere right around that range, I believe. I'll look it up during the break. Right now, what we can say about the New York Stock Exchange is still traveling above the 3 drive to a top pattern. That number is 10-127.63. It's at 10-160 right now, so nothing real bearish about the New York Stock Exchange. In fact, nothing bearish yet. And if we do see net decline issues, maybe I got a tab that's open. No, I do not have. No, I do. I take that back. I do have this tab open. I can just give you the number here right now as we speak. I was wrong. 593. I don't remember what I said, but I know it wasn't 593. 593 net declining issues are what is needed at the end of the trading session today in order for the real tug-of-war line at that zero line of the oscillator, the summation index, which has just barely ticked up to the upside, but still, as we speak right now, inside the New York Stock Exchange, all systems go to the upside out here. If we take a look at the VIX, now this is interesting. During the break here, I just simply had overlooked this for the past couple of days out here. See what happens? You get a little rusty when you take a few days off here. Well, the VIX is trading at 14.18. Now that's not the news. The news is that it's trading above the 50-day exponential moving average out here. Folks, if we take a look at this, if you're watching us on Tiger TV, thanks so much for doing that. You may be listening on your radio or your mobile device at tfnn.mobi. Well, we really love you for doing that. Remember, this show will stream live to your smartphone, your pad device by going to the homepage of tfnn.com. Over on the right-hand side, you will see a button, 3 little smartphones on it. Click on that. You'll see this chart streaming live. And, of course, you can get the archive on Channel 10. Now, as we take a look at this 50-day, the squiggly line, the red squiggly line on my chart out here, let's go just simply map this out. What you're going to see here, I'm going to just use a little circle tool here. You can see last time that we saw the VIX get above the 50-day exponential moving average was on September 27th. Well, if we take a look at September 27th, you can see the market went ahead and moved to a lower low all the way down into the October 9th time frame out there. That's when the VIX was above the 50-day exponential moving average. Let's take a look at the time before that, the precedent before that. August 15th is the day. Let's take that same circle tool out here. August 15th, market makes a low coming in on the trading session of August 27th out there. I got to grab that little bit of water here. Thank you, and sorry about that. So you can see prices moving lower. Let's keep moving back here. Let's just do the old litmus test out here. What happens when the VIX gets above the 50-day exponential moving average? Well, here on May 22nd, the price there was $14. 13.05 was the low. It closed at 13.82. Actually, let me just do this here. Let me go back. I don't remember we're around $14, right? 14.14. So you can't say, hey, Steve, it's at 14.14, so it's too low out there. Hey, we're coming back to this time period here, where it's at 13.05 at the low at the open, 13.45. That was on May 20th. Hey, May 22nd, key reversal session out here. So the point is, are we supposed to be paying attention to this? Yeah, folks, I would say we're seriously supposed to be paying attention to this, not because we've seen a significant market top, just simply from a daily standpoint. If we're taking a look at, hey, is there going to be some type of pullback, correction, whatever it might be, out here, right now, as we just take a look at our third instance here of the VIX getting above that 50-day exponential moving average. Well, that showed you a bit of a pullback. How about let's go a little bit further back here? How about April the 15th, 2013? Let's go take a look at that. Take a look at that was at a price point between 12.66 and 13.12. Of course, the 50-day exponential moving average there was 13.50. Of course, we saw a bit of a pullback here, about a 4-day pullback into a low on the trading session of April the 18th out here. I think you kind of get the picture. We're not going to go to any period here. I'll go back just to prove the point. Might as well do it. I've got 2 minutes. We might as well do here. Might as well get the message across to folks out here. Take a look at this time period where the VIX gets above the 50-day on February 20th. We see a pullback of 3-4 days out there. So there, let's go back to another time, a point in time. Let's come back here to what looks like December 19th, 2012. How about this? We're making a 1-year move, and each time that the VIX gets above and closes above the 50-day exponential moving average, we've seen a bit of a pullback, 3, 4, 5 days, whatever it might be. Other patterns out there for us to be paying attention to. So that takes us back to December 18th. Let's go back one more period here. Let's take it to October 19th of 2012. October 19th, we saw the market go ahead and pull back into lows out here of November 16th of 2012. Those were pretty important lows out there. That was a significant low in the marketplace. So I think that if there is one chart that Stevie Son has pointed out that we need to be paying attention to, it is this VIX index chart. The 50-day exponential moving average. The day is not over. We got a lot of time left in the trading session. In fact, we've got, most of the day. It's only 45 minutes in. But the number you want to be paying attention to is 1379. Right now, the VIX is at 14.14 out here. If it gets back below the 1379-ish range out there, I'm not talking about 1380 means that we're above the 50-day exponential moving average, but, above it with any kind of significance here. That tells us that we should expect at least a pullback for a few days out there. Right now, the Dow's off 28 points. The S&P is down 50 cents. NASDAQ is off 40 cents. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're rocking and rolling out here. I'm not talking music-wise. I'm talking market-wise. The Dow's off 13 points. Right now, S&P is flat. So we've got the fight between the bulls and the bears. We took a look at the VIX. You know, you're going to want to use that as one of your signals out there. You're certainly going to want to use the net declining issues. 593 was the number. You want to see something more. You don't want to see 594. You want to see 600, 700, 800. The more, the better out there. Well, that depends if you're bullish or bearish. At least if you're bearish, which I'm not at the moment, you want to see something more than significantly more than 593 net declining issues out there. But that VIX indicator, as we take a look at just simply using it at the 50-day exponential moving average line, you can see the impact that it's had in the past. We can go back and back and back and back, and because it works every time. Kind of a cool indicator out there, just paying attention to its level. You know, it doesn't tell you for how long, does not tell you anything along those lines, just tells you that when the VIX gets above the 50-day exponential moving average, man, you want to make sure you've got your tight stops in place out there because it can lead to something significant. It may just be a couple-day storm, who knows what, but right now it is something to be paying attention to inside of the markets out here. Price levels, that's going to be the other areas to be paying attention to as well. So we'll just simply try to put all that together for you during the entire day out here, entire day of programming. We do have Goldilocks is down $21 right now. Silver's off 53 cents. Light sweet crude, that's up 79 cents. It's trading out at 93.54. Let's take a look at the indexes, though, first. Let's go take a look at the S&P 500, see what we have out here. S&P 500 here, again, just not giving us no bear signal on Friday. That is for sure. We saw a sell-off in the last half hour or so. Of the trading session. Of course, it was a shortened trading session, light day out there, some profit taking that went in. The market actually had stretched from a rubber band standpoint coming into about 12 o'clock, 12:30. I'd actually taken a long position early in the morning and closed it out before then as the rubber band had gotten stretched. Didn't take the short side, just took the long side and went out and played some great golf out there. And that was Friday was a nice day in Florida. In any event, inside the S&P 5, you don't want to hear about my golf antics, I'm sure, but I did hit. I played over at the Grand Cypress Resort, and the Grand Cypress Resort, man, what a beautiful set of golf courses out there. And you talk about immaculate. Oh, my goodness. I mean, just as in great a shape as you can get. Greens rolling just like you're playing out at Augusta. I mean, just in incredible condition out there. I mean, fast as can be, which is how I like them. Rolling out there, and they've got one of my favorite holes, my absolute favorite hole out there. I think they've got 27 holes on the, no, not 20, 36, 54 golf holes out there. And my favorite hole, one of my favorite holes, I never really play it all that well because it's so difficult, but absolutely one of my favorite holes, dead into the wind, 190 yards, dead into the wind, out of the rough, nice 2-iron, crisp, straight, uphill. Landed on this green. It is just a small green out there, ball bit, and a nice little birdie to finish it off. And that was a good day. It was a good turkey weekend. In any event, I'll get off of my golf, although I've got plenty of fishing stories or golf stories out there. We do take a look here at the S&P 500, not really giving us any bearish signals here just yet. Just a sideways trading day, and as I say, nothing that took place on Friday. That's inside the S&P 500, so it's still telling us the story of long and strong. Maybe just a sideways move to work off a little bit of that overbought, overeaten, had too much turkey out there. Let's take a look at the Dow, see what the Dow is doing. Now, the Dow here on the futures gave us a shooting star candle. No shooting star candle here on Friday. Too much of the bottom of this wick here. As you take a look at inside, that's too much wick in order for this to really be a shooting star candle. So no candle of any significance, no key reversal session, no nothing out here inside of the Dow. So the Dow here really still wants to travel up into that 16,006-ish type range, 16.7, 16.8, right around there is where it wants to head to 16.5. Somewhere right around in that range is where the Dow wants to move to. You can see it's kind of hit that, not kind of, it has hit the mid point of its primary trading range boundary lines. It did that on Friday out here, so still no real reversal inside of the Dow as we speak. Of course, that VIX stay above, if it stays above the 50-day exponential moving average, we'll see a reversal out there. We'll see it pretty darn quickly. Russell 2000 almost setting up an island reversal here this morning. We take a look at its low from Friday was at 1142.52. The open today, or the high, is 1142.30. 1142.30 versus 11. Oh, I'll take that back. Son of a gun. Stevie needs to open this up here. Do we have an island reversal? We most certainly do. We got an island reversal, folks. That's inside the Russell 2000. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is off 19 points. S&P still flat out here, but we're going to go take a look at this little morsel here that we have run into, and that was the island reversal inside of the Russell 2000 out here. Now, that's on the index that we're taking a look at. Now, the first thing I'm going to do is I've got a couple of tools that I have been developing here for the Anson Windows software package out here. One is the primary trading range of boundary lines out here. Very, very easy to work. You know, if you were with me as I've been developing this tool, so I started developing this a couple of weeks ago. I've got multiple tools being built here on a number of different trading platforms that I use. Now, in this case here, the primary trading range boundary, the first time I showed you, was a bit archaic, and now all I have to do is just pick out the area of the chart that I want to take a look at and try to identify the largest number of co-located opens and closes, then the second number, third number, and so forth, and it goes ahead and maximizes, identifies where the horizontal areas of support and resistance are. In this case here, you can see I've got the Russell 2000 going back into the 2007 time frame here. So I'm just going to come on over. I'm going to hit my little PTR line buttons. It'll go out there, and it's doing all of its calculations here. It's taking a look at each of the opens and closes throughout that time period here. So it works pretty quickly considering all the things that I actually have running here in the background. Now, the black, the very dark line here, this black line at 8:26:26, out here. That has the largest number of co-located opens and closes. One of the things I added to the system here is where I've got the numbers on the right-hand side. Tell me where my midpoints are, where the actual primary trading range boundary lines are. This red horizontal line coming across, that's actually the 2007 tops out here. Once the Russell broke above that, which it did back here in January of 2013, it was off to the races. So a longer term, it's got a big movement to the upside. But today may, in fact, be setting now the high out here, the primary trading range boundary line. This is just not magic, not something that I just drew in here. This is just taking the data that the system gave me. 1146.63. Remember, we use these things really as round, and you'd say maybe 1150 or what have you. Well, interestingly enough, the actual high was a round number high out here on Friday, 1147 to the penny out here, and that was inside the Russell 2000. Now that 1146.63 happens to be the primary trading range boundary, so it's a normal area of resistance out here for price to have traveled to. Also, you can see the 1 to 1.272, so slightly above that area as far as A to B equals CD patterns. That's coming off of the low out here on September the 3rd. That's your A point. Your B point is October 1st high, and your C point here is the it looks like 0.382 retracement right down to the bottom of that primary trading range level. 1039.80 actually got down to 1037.86. Did that on October the 9th, and then boom, it was off to the races here. That shallow retracement telling us more than a 1 to 1 A to B equals CD was the likely outcome. Well, we did get that likely outcome. Now, what we're going to pay attention, let's get rid of the A to B equals CD. We can always draw that on here. Let's go ahead and clear this. Now, this black horizontal line going across my screen, that's the last time we really saw significant resistance inside of the Russell. Once it cleared that level, said, okay, it wants to go up to the next area. Well, it really did that horizontal area of 1147. Let's go ahead and get rid of that black line. We'll clean it up just a bit here. Now what we're paying attention to is an island reversal. Now, the island reversal, the way that it works, folks, and it's very important at highs. This is at all-time highs, by the way, inside of the Russell. Now, it's a daily chart that we're looking at out here. Well, if you take a look at the high on the session of November 27th, that high was 1141.50. The Russell, actually, the index, gapped up on Friday. Makes sense, right? Because we had some time off here. It gaps up on Friday. And the low, though, which is really important, is 1142.52. So there's a gap in price here. Now, that alone was very bullish. The bearish side came in today. The bearish side came in today because when it opened, it gapped down below the low of the trading session of November 29th, 1142.52. So far, our high today is 1142.30. We've got a 20-cent gap out there. Now, visually, I didn't see it. It didn't look like it was a gap, not until I started looking at the numbers. If I blow it up on my screen, or if I go take a look at one of the other charting tools that I use out here, we'll punch that up on the screen. Let's do that right now. Well, that one actually showed me that I had both a rising window and a falling window. The rising window, so that showed me right then and there that we had an island reversal. Now, that is important. And a change in trend, you can see we're in the cautionary sign of my indicator out here, my trend indicator. We're still not there. We're just caution. This is just caution, Will Robinson. We got two pretty big caution signs, don't we? We got the VIX being above the 50-day exponential moving average. I don't remember that number. I think actually I wrote it down in the den out here, right? I gave that number to folks, 1379. Right now the VIX is at 1410. We know that being above the 50-day exponential moving average, that's bearish. Now, I'm talking short-term here. I'm like talking swing trading, day trading kind of stuff out here. I'm not talking about the intermediate time frame. I'm not telling you to run for any hills or anything like that. All we're doing is just we're interpreting the message that the market is giving to us as we speak here at the moment. And so we've got a key, not a key, I'm not going to use that because it's not a key reversal session, but we have a key reversal pattern out here with that island reversal. As bearish as you possibly can get. And when you have a true island reversal. Now, you'd like to see it obviously inside the futures contract. We don't have that matching up. I'll put the futures contract up here. We'll see what we do have to find any kind of areas of resistance out here. But I'm suggesting that if the VIX does close above the 50-day and the Russell 2000 maintains this island reversal, if you were going to go ahead and go short something, what would you go short? Something to think about. So I'm going to give that to you to think about. Now, if in fact you see the Russell 2000 close below 1128 today, now that's 9 points down, 11 points down. We're trading at 1137 right now. Then I would say back up the truck. because then you will have seen in one day a change in trend with a significant bearish reversal pattern out there. Doesn't mean that things can't change tomorrow, but you would have truly seen a change in trend taking place inside of the Russell 2000. I'm talking on the daily chart. It's the Russell 2000 that is the index that has had that's been the most wavering. It has had, coming off, and I say wavering here, even off of the October 9th level out here. Let me put my little crosshair up here. Coming off of the October 9th level, you can see how it's shifted from bullish to super bullish to the yellow area. Those are areas of caution. That's just means caution, doesn't mean exit. You can still see we're just inside a cautionary sign out here, but you get below that 1128-ish range out there. That would be very bearish inside of the Russell 2000. Now, I mentioned the futures contract. Let's go see. This is going to be delayed by 10 minutes or so out here. I believe it's delayed. It's still on a 10-minute delay out here. But it did give us a little shooting star candle. That was on Thursday. That was on Thursday. A little shooting star candle. That is the opposite of a hammer, and so that is a reversal signal, high of which if we saw a close above that level, that would be bullish. We didn't see a close. We saw that high get tested. The high is 1145.20. The actual close on Friday was out at 1141.70 out there. So even on the futures contract, you've got a area of potential of a reversal sign up at the top out here. Very interesting is what Schultze would say out here. So the biggest, most bearish signs that we've seen here now coming from the VIX and the Russell 2000 out there. If we do take a look at the other indexes, let's do it this way. Let's use Stevie's chart out. Let's go take a look at the stocks. Let's go see what the semiconductor index is doing. No reversal sign out here. Still in the strong bullish camp. You close below Friday's low out here. That would not be unusual. That would give us. That would say we'd see the caution sign tomorrow. That is 509.78. But you're trading at 510.18 right now. Let's go take a look at the transports. We're going to take a look at some of the indexes that we just simply kind of overlook out here. Where are the transports? They should be right here to see what the trannies are doing. They're not running away from Jeff Bezos and the drone delivery system. Actually, I think it's kind of cool out there. Great marketing tool. For sure. I mean, that's all he's gotten everybody, even myself now. I'm talking about it to you on here. If you didn't see 60 Minutes last night, a little cool episode out there. You can probably find it on the internet or what have you. In any event here, as we take a look at the transports, they're actually having a nice bullish day out here. So no reversal signal shown up here inside of the trannies. If we do take a look at the Dow itself, Dow Jones Industrial Average right now, that's trading out at 16,000. 055 out here. We got the cautionary light as we speak right now because it's trading below the low here of Friday, the low of which is 16,074, and that is inside of the Dow. But the Dow, you can start to see a change in trend. You get below 16,039 or so. So that's only another, 15 points down, something like that. So we're starting to see some real caution lights come into the market here, potential changes in trend for a retracement out there. So that's also inside of the Dow, and the Dow has been a strong index out here. What have we not taken a look at? Let's go take a look at the NDX 100, the NASDAQ 100. Today, if you were to get a close, now today could be if you were to see today a intraday, if it got below 3481.31 and closed red, you'd have a key reversal session out there. But so as we speak here right now, let's just take the information as we've got it right now, and right now it is still in a very bullish mode out here. So I think here's the real setup, folks. Markets have been moving very high out here, moving very high. Boy, that's just great English, isn't it? The markets have been incredibly strong, and if there is a change in trend coming, just wait for it to occur. Don't jump on board as we speak here right now. We've got everything is really kind of laid out for us, which is kind of cool. Now we just want to see how the market actually plays out today. Because if there is a change in trend, and this is really any kind of significant market top out here, you got time to get on board this train. And I say just wait today. Wait for today. Wait to see what kind of signals happen inside of the marketplace out here. That's what you really do out there. You don't need to jump on board early just because we're seeing some signs. The sign, what's great is that we've got some signs. Those signs get evaporated, and that just tells you how strong of a marketplace. And, we don't really have the confirmation when it comes to our currency pair. Our Euro-Japanese yen, that is not in place out here. If anything, that's actually moving higher. And, in fact, if the Euro-Japanese yen closes above 139.12 out here, that says that it wants higher price. And which one would win out, the VIX or the Euro-Japanese yen? I don't know the answer to that, but we would have divergence. And we got all kinds of divergence. I can show you divergences coming out of the yin and the yang out there. Those divergences have been around for so long, I'm tired of actually even looking at them or paying attention to them. At some point in time, it's going to matter, but I think we'll see some other signals in the marketplace out here. And I mean divergences with the Dow Jones Utility Index. That's been trending south, and the Dow Jones has been industrial index. That's been moving up, and the GE's actually, I think, moving down with the Dow moving up. That's not a real bullish sign out there. I got to get so many divergences we can go take a look at, but they just don't seem to matter out here. This is the one that we certainly do pay attention to. That is the Euro-Japanese yen. Let's go take a look at some of these stocks here that are popping. Let's go see what's going on inside the sectors. Hey, let's go do that. Let's go see what's going on inside the sectors here. Let me put the other charting package up on the screen here. Give me a moment. Let's go see what's going on inside of the energy sector, the XLE. We'll take a look at the energy sector, take a look at the financial sector. So the energy sector here, we're in the cautionary zone out here. This is actually today forming as we speak, potentially forming a bullish engulfing candle. Down here you can see it's traveling into the hammer. The XLE, you'd have to see a real break of that hammer candle in order to get bearish. That low is 85.04. Right now priced out at 86.61 out here. So there should be some pretty good support at the bottom of that hammer candle. You can see it was tested back here on November the 7th out there. That should be a pretty good level of support. Let's go take a look at the XLK, the technology sector. Let's go see what it is doing here. We take a look at the technology sector. It's still long and strong. Now, this is the number one weighting inside of the S&P 500. So you're going to need to see a crack here, a real crack inside of the technology sector. Would be a close below 34.34 or so. It's trading at 34.67, so that's what I would be watching for inside of the technology sector to show its chinks in the armor out there. Otherwise, it is long and strong. Had a little rising window. Of course, that's not unusual coming into Friday's session with the market being closed on Thursday out there. And that's why with the market being closed on Thursday, let's go ahead and not a grain of salt. Let's make sure we're paying attention to the Russell 2000 out here. But being closed with the other markets around the world being open, we just have to be somewhat cautious even of that reversal signal out there. At least that's how I'm going to go ahead and interpret it. That's the XLK. Let's take a look at the financial sector, the XLF. Let's go see what it is doing. Gave us a key reversal session, quite frankly, on Friday out there. Now, light volume pullback, late volume day, so not sure. Well, here's what we can say. We had a shooting star. That took place right out here on November the 26th. Bearish engulfing on Friday. That says that if we see the financial sector take out the highs, close above the high, 2164. It's at 2158 right now, but it closed above 2164. And the financials would be saying zoom, zoom, zoom to the upside. Right now, the Dow's off 29, S&P's off 8, composite off a couple of points. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's take a quick peek in at the ETF structure. Let's take a look at some volumes here this morning. We're, an hour and 20 minutes or so into trading here. Let's take a look. To start off by looking at the IWM. IWM right now backing off with some pretty decent volume. We've seen 14 million shares so far in the first hour and a half of trading. Last time we saw any movement to the downside, you've got the November 1st, I don't know what was up with that candle session. That had 117 million shares to the downside. But the area of resistance here that you'll want to take a look at, or I should say area of support, really becomes the doji candle from October 29th out there, the high of which is 111.62. That's the last time we saw any kind of, that's the highest level of a bearish reversal sign that we saw out there. We've seen a couple of them. We saw the bearish engulfing candle the very next session, which is why I'm using the top of that little doji out there, as well as we saw a key reversal on November 18th. So level of support that I would be paying attention to is the 111.62. You close back inside that today. You're at 113.17. That would be a big reversal. That's at least where I would expect the IWM to move down to on any kind of reversal out there in the marketplace. Let's go see what the SPYs and the Qs are doing out here, as well as the diamonds. Qs here right now, not really showing us any weakness here. The Qs here, now let's take a look at I take that back. I digress just momentarily. Let's take a look at the low of Friday's session. That's going to be key here because that is 85.47, and the low so far today is 85.50. Okay, so you're 3 pennies away intraday from a potential key reversal session out here. Last time we saw one was back on the trading session of November 18th. So pay attention to the Qs out here. Closed below 85, actually closed below 85.54. A little bearish engulfing. I do say little because the bottle of the candy is small, and you had a little gap up here. Of course, a gap to be expected because of the closed trading session on Thursday. But that's what we want to be paying attention to inside the Qs is some type of reversal signal inside of the market. Let's take a look at the diamonds. Let's go see what Lucy in the sky with diamonds here is doing. No reversal signal or anything like that. Volume so far today, 1.9 million shares, so nothing earth-shattering here, but you do have volume picking up to the downside versus to the upside. November 22nd is a swing point it's trading into. That only had 4.5 million shares to the upside. So it says, okay, a little bit of caution out there in the marketplace. Let's look at the SPYs. We didn't look at the SPYs. Just trying to remember what we hit and what we didn't hit out there. Inside of the SPYs, still really no big deal. Volume-wise, 26 million shares to the downside. That's trading into 100 million shares here from or trying to trade into that November 18th swing point area. So volume, let's see, 104 million shares. If I do the math on that, you got actually some pretty decent volume here today inside of the SPYs. So the buyers and the sellers have shown up. We know what to look for. We're going to be paying attention, so let me just recap it for you. Let's go back here. We're going to pay attention to the following things. Number one, we're going to pay attention to the VIX index. That VIX index closes above the 50-day exponential moving average, which the number right now is 1378, so that's the range. You close above that, and that's where we've seen some pullbacks in the marketplace. So that doesn't mean you necessarily have to sell. It means I'm prepping you for what to be looking for. That's the first thing. Number two, you're going to look for net declining issues inside of the New York Stock Exchange. Right now they're at 765. If you get above 593, that says, okay, the bears are back in control of the NYSE. And I gave you some dollar amounts to pay attention to in the indexes. Those won't change out there. Folks, thanks so much for being here. Have a wonderful, a magnificent Monday. I'll look forward to seeing you bright and early tomorrow morning here at TFNN. Have a great day, folks. Look forward to seeing you soon. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.